Hey traders, Nick recapping an eventful day. It seems like it's a habit now saying that. January 8th, scoreboard, do I really need to bother? Green all over the place, almost 2% up on the NASDAQ, almost 2% up on everything actually. Everything is in line, even the small caps actually underperformed everything but just by a hair. All right, everything is green on my watch list except for GoPro and Tesla. Tesla's flat, GoPro's down almost 4%. Not good. Speaking of 4%, Apple was up over 4%. Okay, so today, obviously, people liked what they heard. And what started, how that happened is last night. This all started last night. Evans, Chicago Fed, I believe, right around here, gave us 14 points in the ES after market. The S&P 14 points was positive because of what he said. He's usually a bullish guy, so I don't know why they take it. He used the word catastrophe or something, disaster or something like that, if they raised rates early. And then nothing overnight. And then here some other stuff went on, and then we opened up and ran up and away. What happens is people that were short didn't expect this 14 points overnight. They were short overnight to try to scalp some money. Then they have to buy to cover the shorts, and then they have to buy. So buying begets buying begets buying, and it just tumbles up. That's called a short squeeze. All right, so it was classic. Today was definitely bullish. They tried a couple of times to sell it. This is the S&P. We're zooming in. Bull, 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 bull. Then boom. So what happened really in theory? It was kind of like a perfect storm for against the bears. What happened is the SPX, not the SPX, perfect storm. The bullish comment from Evans, Draghi comments. That was the other thing that I forgot to mention. That second tick after the overnight, Draghi comments and the ECB were talking bullish also. Merkel gave some positive Greece things. No longer defiant, as not harsh. At least she was not harsh. And we also had higher rates, a really big bounce in the 10-year that was well over 3. It did close not on high, but still strong. We drop in the bonds of over 1%. All these are bullish. All of these are bullish. OK oil, was positive, was negative, was positive. It's just such a rigged market. Look at this drop right here in oil. Why would it drop like this and come back up? It's done it every day, a couple of times a day. It's just a rigged market. I don't even. Somebody asked me, what do I look for? What ETF? I was like, how do you know? Do you go private? Anyway, do you go drillers? A big guy? I don't know. The call on oil I had when oil dropped and collapsed. And the big guys like Exxon, Chevron, all those guys got hammered. I said, go long. Those big guys will be the play to take because if there's going to be fire sales from all the other guys that are going to have to blow up, they'll be there to buy the rummage sales. And that was the right thing to do then, and that's it. From here, I don't trade oil, but it's affecting the markets in and out. What else was? Oh, and something that nobody's talking about, currencies. I think the yen today being down also left room for run up. And throughout the day, every dip, I could match it up to a little spike in the yen. So nobody's talking about that part as much as they should be. So that's what happened today. Let's look at there are a couple notables. But first, let's look at the trends. What happens to our trends? Those are important. You know me. Trading ranges. Well, I know I need to know where the ranges lie. So let's go to the Qs. Those are the Nasdaq. Really, the champion of the day. I need to go back. Is Apple. Who would have thunk that Apple would have another 4.5% day, and then it closed almost 4%, 3.84. The high was 112. Had it broken that high, it had the chance to add another dollar, but they decided they don't want to do that. It's had a couple of days like that before, and they marked highs. People chasing it like that. So let's look at those days before we close today. All right. So back to the Qs. This is the Nasdaq. Remember, we had a nice trend going here. It broke. It got negated, and then it broke. Well, this was supposed to be a bearish. A bullish technical indicator, and it sure paid up. Gapped up and ran. Well, now we are. If I extend this, we closed inside this trend. So now, if you want to ignore this as fear mongers, or as Kramer called them this morning, stupid people, stupid people. Like, yeah, thank you for calling everybody that actually acted accordingly stupid. And that guy should just use better words. And so now we're back into the range. So now we're looking at this, which you can get to tomorrow with another day like today. And if it does, then what? That's the decision to be made. So now it comes back into expectations. Volume was just as big as yesterday, was less than the volume that we sold off on. We sold off on higher volume. The red ticks came stronger, at least the last one. And so now we're back inside the range. This is the cues. If I can take a look at the same from the NASDAQ NDX, remember those dashed patterns? Same pattern as before. Here it's dashed and red. I also noted here that we have some sort of a parallel going that got broken, and then that we almost held on to it here, but then boom, boom. And then now we're back inside of it. We're closed almost in the middle of it. Now, things to matter is these candles right here. They were kind of a lid until boom. I don't remember what happened here, but we came up and then we gave it right back. So now I want to draw. I'm tempted, and I'm going to do it just to complicate this chart even more. Right here, not a scientific line. I should draw it thin, but I just want to leave it here and see what we do, which is basically tomorrow. Doesn't mean much. It's just an area where actually, whoa, I missed it. Yeah, well, this area, this box right here, to see what happens here. It was like 2-3 candles of struggling and then big gap above it. So let's see what happens. Today, undeniably bullish day. All right, the SPY, SPX, S&P. This is red and blue. That's the same pattern that we kind of did. We also have this pattern that's long, 2-year long pattern. This brown one right there. I can expand a little bit. Yeah, 2 days ago we pierced it. We even closed just below it, but it's not scientific, so it could be like on the line. The next day we rejected it completely, and then today we also rejected it, and now we're headed towards the upper end of the thing. And this is still a rising wedge, which most times, often enough, is bearish. They keep ping-ponging, and then if they breach either side, they run. Either run up or run down. So it's had 1, 2, 3 touches. So this time, if it gets here, it could blast out. Given the right circumstances, it could rise up. Sorry about that, folks. I have 2 phones ringing all over the place. All right, so we're back to the regression line, which is that blue line right there. So now we're back to fair territory. What's not fair is the matter of which we're going down and up, like this big guy, this big guy. These 2 days are almost exactly mirror images, if you remember. 3 days ago and today are exactly mirror images. Apple had a terrible day, I think that was that day, and today is the exact opposite. So it's like nothing happened. So if nothing happened, then chances are that the bulls want to try to make another run at 2100. Nothing changed fundamentally today. Absolutely nothing changed fundamentally. We're still expecting something from Draghi, and God help the bulls if Draghi doesn't deliver something, because he opened his boca again today. So let's see. He keeps promising. All right, whoopsies. That's not what I needed to do. All right, so SPY, the SPY is another way of looking at the S&P. That's that green 2-year-old trend line that we kind of kissed and bounced off of, and now we're headed towards that red line up here, which will be at 210, which will coincide with 2100, just roughly speaking. This box I drew with this box to show you that this possibility that was going to happen, and indeed it happened. I can delete those boxes after today. This green line is not scientific. This just assumes that these two were overshoots, and that this is really the range that with which we're playing. If that's the case, then tomorrow should be down. But that's just speculation on my part. The real trend is not, the limit is not here. It's up here for now. The red one up there, so, or close to it. Things are looking bullish. Everybody's on the same page with that, which is what scares me a little bit. I have not changed my macro, which is there is room for upside. I'm not running to grab the upside, but let's see what happens. This is the box that was a killer for the small caps, and boom, failure, little peak, failure, little peak, failure, big peak, but failure. Here we are, mounting another. So now we're doing it from higher lows. So now the bulls are gathering steam. Maybe the bears are getting tired. They'll let them through one time. Were they sleeping at the wheel? Would they let them through again? We'll see 120. Everybody's like, oh, it's got to see 120. Well, we saw 120. We got 3 ticks above it, and then we reverted right back down. All right, so that's the IWM. You can look at the same thing, only 10 times bigger with the RUT. Here you can see that wedge, rising wedge, higher lows. That's really bullish. 1, 2, 3 touches, and it's coming up to the 1220. So this is the box that I was talking about earlier, where it failure, 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 failure. It got poked through, and then here I said one candle is not good enough. Here we are. They have the chance to, another day like today, get up there probably. Anyway, I'll see what happens. If it gets too high, I'll start shorting it again in size. But I will note everything unless the fundamentals change. Okay, so let's look at the champion today, which is Apple. You know, Apple accounted for about 0.5, if not 0.6% of the. So without Apple, neutralize Apple, the NDX would be, instead of up 1.94, it'll be up 1.34, roughly. So a lot of it was Apple all by itself. This is the white channel, the dotted line, and now we're headed towards the upper end of that channel. So it's nothing surprising that it's at this level. What's surprising is the violence with which it got to. Remember those 2 days I told you they're mirror images of each other? Look at the candles in Apple. Boom, boom. Exactly the opposite. So it's had candles like this before, Apple, and let me see if I can visually grab them. Here's one. And here's kind of one. I remember one recent. This one, and started a run up. So there's one really big one. So I'm not chasing Apple from here because we already knew that it was along earlier and we sent out notes, and I know a lot of you sent me thank you notes today. Thank you for Apple, thank you for Baba, we're long, we're long. But it was the champion today. So now how it handles that white line is pretty important, and we will have a chance to see it tomorrow. It is in resistance territory. I will update you before the open as to the levels where they changed. Another guy that we need to look at is Chipotle, up, oh my gosh, almost 4%. Look at that. You know, I've been talking 720 in Chipotle, and these 2 candles is like somebody knows something. There's no way I would stand in the way of this guy. I did say it would jump up in the 700s on a headline. Well, guess what? Today it got there without a headline. Can you imagine? I said a headline could be like stock split or more engineering, financial engineering. But boy, today, another champion today, 2 I would like to mention. One is Google. It got hammered today. Look at that. It lows in this is Google L. It did reject it, but I also told you that it's got lids on it, right? So hopefully you didn't chase it up. But chasing works both ways, down and up. If you chase down, you're not already short Google, then you're gonna lose money. It's a great company long term. So today it got downgraded. It had bad news with regards to share of ad shares or something because of Firefox replacing them with Yahoo, and it didn't go red. It did go a lot red, but rejected and closed up on the day. Not by a lot, but it closed up. That is a good sign. I need another day to see what happens. Same story. This is the Goog. Same story for Priceline. Priceline today got downgraded as well, defended this line very well. I said, when it was here, too early to catch that falling knife, and some of you listened, and I think a couple didn't, but the ones that didn't took way lower credit put spread, so they're just fine. Now, one can think about catching Priceline because it had negative news and it did not drop. The only knock on both of these ideas is that the markets were up 2% almost today. So I need a day where the markets are normal and see how they react. So hopefully tomorrow we'll get markets normal. Speaking of tomorrow, what do? Coin flip, we're going to have big news in the morning, jobs reports, blah, blah, blah. Now, even if somebody told me the exact number what the jobs are going to be, I couldn't tell you what the market's going to do, because how will the market react? If we have a really good number for jobs, will the market take it as bad news? Because now Yellen's hand will be forced because you've got wage inflation and you don't want to let things go out of control. That's one way. So they'll sell. If they have a really bad number, then they'll say, woohoo, we can buy it because Yellen's not going to be forced to raise rates. Not sure. If it comes in line, did they already price in a good number? I have no idea. Plus, we have surprises. I mean, Draghi can't seem to shut his mouth. So, and the ECB, they keep saying, or Draghi, at least some people there, we're going to do this, we're going to do that. We can't take negative inflation. We're going to do this and we're going to do that. And they have yet to deliver anything. They've been doing it for over 2 years. And we keep buying it. By buying it, I mean literally buying in the market. So, whatever you do when there's headline, I usually keep my positions small because I don't know what's going to happen. They're binary events, meaning it's on off, buy sell, and it's a coin flip. It's not like I can do homework and come up smarter. This is an equalizer. The smart guys that do homework are at equal footing with the people that just flip a coin and say, I'm going long, I'm going short. So, this is it. But I did get a lot of good notes over the calls on Apple and Alibaba and a few other names, and I appreciate the good mention, and hopefully we can do more of these. Nick signing out. It's 16 minutes.